Paramount buys Warner Brothers Discovery for $111 billion. And somehow that's not even the most unhinged thing I read this week.
It's absolutely the most unhinged thing. 111 billion. 2 years ago, that number would have gotten you laughed out of a pitch meeting.
Okay, but Bitcoin Depot acquiring a social betting platform.
That's not a deal, Nate. That's a cry for help.
Fair. All right. Media, Megamergers, and infrastructure blowouts. Let's go. The rundown. Okay, shipping first. Hapag-Lloyd is buying Zim for $4.2 billion.
Two of the most recognizable names in container shipping, just folded together.
The ocean is getting smaller.
Watch the trade lane concentration on this one. Regulators are going to have opinions.
Noted. Moving on. Cintas and UniFirst.
UniFirst shares are flying, and there's no confirmed bid yet. That's a problem.
Street Read is scale wins and services, and Cintas has the balance sheet to close before regulators even pick up a pencil.
I've heard that. I'm not sure they're big enough to move fast is the analysis I'd stake my position on.
Fair, but the market clearly disagrees with you.
The market is often wrong. We've done entire episodes about this.
Japan. Denso is making a 1.3 trillion yen run at Rohm.
That's a massive number.
Auto parts supply chain consolidation. Everyone's been predicting it for 3 years, and now it's actually happening.
Good for the people who waited.
AFM Capital Partners taking a majority stake in Incodima 3D, metal additive manufacturing, defense, and aerospace customers.
Quiet deal. Real strategic logic. Someone is betting that 3D printed metal parts are load-bearing for the next defense cycle.
Pun intended?
Always. And then there's this Bitcoin Depot has acquired Cut, a social betting platform.
Bitcoin Depot, the ATM company.
The ATM company.
So they're a betting company now? Or still an ATM company?
That is genuinely unclear, and I think that might be the point.
That's not a business model, that's a mood board.
Also, USA Rare Earth buying Texas Mineral Resources for $73 million in all stock. Critical minerals, domestic supply, geopolitical hedge. That one actually makes sense.
See, that's a real deal. Real assets, real thesis.
As opposed to a Bitcoin ATM company buying a betting app.
Different energy entirely. Speaking of energy, we should probably talk about what's actually happening in media right now.
Oh, we absolutely should. The big one. Okay, $111 billion. I need someone to say that back to me slowly.
$111 billion? Paramount absorbs Warner Brothers Discovery, and suddenly we have a media company that owns everything from CBS News to HBO to CNN. It's not a merger, it's a geological event.
And the timing is wild, because 2 years ago, David Zaslav was doing victory laps after the Discovery-Warner merger, cutting costs, cancelling half-finished shows, telling anyone who'd listen that streaming economics were finally going to work. And now he's selling.
Which, honestly, respect. He saw the wall coming.
Did he though? Or did the wall see him?
Fair. The debt load on Warner Brothers Discovery has been brutal. This could absolutely be a sale dressed up as a strategic vision.
That's exactly what I want to dig into, because the press release language here is doing a lot of heavy lifting, reshaping the global media landscape. Sure, but who actually wins this?
Scale wins. That's the whole thesis. You combine the content libraries. You have real leverage against the streaming platforms. Netflix has to negotiate with you. Advertisers have to negotiate with you.
Or you have double the content nobody's watching and twice the licensing headaches.
Okay, that's possible.
It's not just possible, it's the historical pattern. Every time media companies merge for scale, the promised synergies end up being code for layoffs and then a slow content bleed.
I hear you, but this feels different in one specific way. The streaming wars are actually contracting. There are fewer players willing to spend insane money on content. A combined Paramount-Warner entity isn't just scale, it's survival math.
Survival math. I love that. That's the most honest framing I've heard.
I have my moments.
And look, this deal lands in the same week that Global Infrastructure Partners and EQT are jointly buying AES Corporation for $33.4 billion. Infrastructure mega deals are back, Nuveen drops 13.5 billion cash for Schroders. Someone is pointing out, and I think correctly, that deal confidence is running way ahead of macroeconomic caution right now.
Which is either the market sniffing out a rate environment shift, or it's the part of the movie where everyone's dancing and nobody's noticed the iceberg.
Classic Nate. Optimism wrapped in a disaster metaphor.
It's a gift.
Speaking of things that feel slightly unhinged, you want to talk about what else happened this week? Because Cintas circling UniFirst is actually pretty interesting, and I have questions about the regulatory math.
Oh, the uniform wars. Yes, let's go. Voices. Okay, so the market observers are saying something interesting this week privately, and I love that qualifier, privately. They're noting that a $111 billion media merger and a $33.4 billion infrastructure buyout landing in the same week suggests deal-making confidence is running well ahead of macroeconomic caution.
Well ahead, that's a diplomatic way to say completely divorced from.
I mean, is it though? Because the counter argument is that big players have been sitting on dry powder for 2 years waiting for rate clarity, and now they're just...
Nate, rates aren't clear. That's the thing. Rates are not clear.
Okay, fair point.
The Fed is still doing its little maybe, maybe not dance, and these firms are writing checks like it's 2021 again.
And yet, the checks are clearing.
For now.
On Cintas and UniFirst, the street red is pretty unified. Scale wins in services, Cintas has the balance sheet, and regulators haven't even sharpened their pencils yet.
I actually agree with that one. Uniform and laundry services is not a business that screams antitrust drama.
No, it's not exactly the kind of merger that has senators writing strongly worded letters.
Big uniform, coming for your khakis.
Genuinely terrifying. But look, the Paramount Warner situation is where I'd push back on the confidence narrative because our team couldn't get analyst reactions today. Nobody wanted to go on record.
Nobody wants to go on record on a $111 billion deal. Think about that.
That silence is its own data point.
It really is. And tomorrow we're going to find out if that silence breaks. Because the Cintas UniFirst situation needs a formal announcement soon, or it starts getting very uncomfortable for everyone involved. Spill the tea.
Okay, I need to talk about Bitcoin Depot before I explode.
The ATM people.
The ATM people, they just acquired Cut, which is a social betting platform, and I genuinely cannot tell you what business Bitcoin Depot thinks it's in anymore.
I've been staring at this, and my best theory is someone at a board meeting said crypto adjacent, and nobody stopped them.
It's like if your local check cashing place bought a fantasy football app. Sure, why not? We're all just vibing.
And then there's Sphere 3D acquiring Cathedra Bitcoin in an all-stock deal, which...
Oh, this one.
Both of these companies, Nate. Both? I looked for a product, I looked for a balance sheet. What I found was a very enthusiastic presence on social media.
To be fair, in 2021, that was enough to get you a SPAC.
It's not 2021.
Clearly, no one told them.
Okay, but my favorite of the week.
Banijay and All3Media.
Redbird IMI backs Banijay. They merge with All3Media, and somehow this is supposed to be a media powerhouse.
It's two studios combining their content libraries and calling it scale.
You know what it is? It's two people pooling their Spotify playlists and announcing they've started a record label.
That's exactly what it is. That's the press release.
Frame it, send it to their IR team.
Look, at least it's not a Bitcoin betting platform.
Nothing is as bad as the Bitcoin betting platform. That's the floor.
Speaking of floors and ceilings, we've got a $111 billion media deal to get into.
Yeah, that one's a little harder to make fun of.
Little bit. Tomorrow's radar.
Okay, 3 things on the radar before tomorrow opens.
Hit me.
Cintas. No formal announcement yet, and that's becoming a problem. UniFirst shares are already moving. At some point, the SEC starts asking questions.
Street read I'm hearing is Cintas has the balance sheet, regulators won't move fast enough to stop it, and this thing gets done quietly.
I'd push back on quietly. Nothing about a uniform company swallowing its biggest rival reads quiet to me.
Fair.
Also watching the Nuveen fund mergers, BXMX and DIX, fold into SPXX before market open tomorrow. Expect Navi disclosures first thing.
Nobody's talking about that, and they really should be.
And Hapag-Lloyd Zim. Any counterbid, any regulatory flag on trade lane concentration. That's your morning headline.
Shipping consolidation stories never end on the first chapter?
They really don't. Speaking of things that don't end cleanly, we need to talk about Bitcoin Depot buying a social betting platform.
Oh, we absolutely do.